Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today's the 3rd of January 2020. Welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD bank website, and specifically our JFD research page, which we update on a daily basis. So yep, I believe you can find a lot of useful stuff here for yourselves, guys, so feel free to visit us here on jfdbank.com and click on the research tab right here. But right now, let's jump into the charts. Now, the first one I want to touch on here is the German DAX. Now, yesterday I talked about this one, and basically the idea was yesterday in the morning that if we get a push above the 13,317 zone, roughly around there, then yes, there it could open the path towards higher levels. We could start pushing towards the 13,426 zone, and you can see that this area held the price nicely. So it kept the bulls down, and looking at the cash index right now, we can see that the index actually has fallen back below the 13,317 zone right here, and is now trading below the 300 zone. So basically we are getting a nice correction right now to the downside. Now, of course, as you probably are aware, we did get some news overnight. We did get some U.S. airstrikes on Iraq, and so this kind of has driven the equity markets and the futures markets to the downside, and of course the commodities have spiked as well. So, well, I shouldn't say as well, but moved in the opposite direction. So basically, they've spiked. So we'll get to those in a minute. But looking at the picture here, looking at the technical picture, even though yes, we are seeing a bit of a slide here right now, still, I'll stick to the same idea as I said yesterday. In order for us to consider maybe a deeper correction here, a drop below the 13,225 level would be needed, because in a way for now, yes, it is drifting lower, but this is a very important level to keep an eye on. That's the low of yesterday, and will drop below this, yes, could open the door towards slightly lower levels. But again, let's not forget that overall we're still trading above this upside support line taken from the low of the 15th of August. Now, it is a bit of a tentative upside line, but nevertheless, we'll keep an eye on it. And yep, we will target that area if we see a drop below the 13,225 zone. So keep your eyes on this one. With the upside, it's pretty straightforward. We need now we need a clear break above the 13,426 zone. Until then, we're not doing anything here. We're not trying to gamble this one. So if we do get a push above this barrier, then yes, this would confirm a forthcoming higher high, and we could aim for higher levels. So keep your eyes on this one, guys. Gold. Now, of course, obviously, gold spiked higher, and as a safe haven, so that's the normal reaction, and it worked out nicely as I talked about yesterday. Basically, I was mentioning that we may see a bit of a correction here after this nice push higher. We may see a push, we may see a correction where the 1525 level could this time act as a nice area of support, which it did perfectly, and from which the reversal happened here to the upside. It managed to actually overcome our target near the 1535.70 zone, so it did overshoot that and drifted further north. Now, This was basically the highest point, I wouldn't say the highest point, but the high of the, it's the high of the 24th of September. Now, the next level that we're going to be keeping a close eye on will be the, let me just grab this marker here, will be the highest point of September, and that was roughly, and it is roughly near the 1556 zone, or 1556.80 zone, roughly around there. We could keep an eye on that one. In a way, actually, I think it's even 59 is going to, oh, sorry, 57. There we go. So that's 1557, roughly around there, guys. So that's going to be our next main target. The only thing is here, now don't get me wrong, again, the same scenario could apply. We'll probably keep on dragging this arrow, this curved arrow up and up. But basically, we are looking for a small correction again before another leg of buying. So that's why be very careful here. Don't get me wrong. It may drift a little bit more to the upside. Maybe test the maybe something like 1550 and then reverse back to the downside. So that's why be very careful. But in case this decides to reverse earlier, this is the scenario that we're going to be looking at, where the price may drift a little bit lower, test the 1535 zone this time from underneath, and if it holds, it could be a fantastic plateau for the bulls to step in again and drive this one to the upside. But now, in terms of the downside, now this is where it's becoming a little bit more interesting. We're lifting our arrow as well here. So 1525 zone, that's what we're going to be looking at in order to consider some moves lower, some further moves lower. But let's not forget that these moves lower could still be part of a bit of a larger correction here, because we're still trading above this upside support line taken from the low the 12th of December. So keep your eyes on this one, guys. Brent oil now, of course, spiking higher, logically, and this is where I was talking about this one recently, and let me just remind myself, that was on the 2nd of, yep, so basically yesterday. Yesterday I was talking about this one, and basically I was telling you, in order to consider some lower levels, ideally we need to see a drop below the 65.80 zone. Now, we did get a few false breakouts, but as you can see, even we couldn't even get a 4-hour candle closing below this. So in a way, this level here proved to be quite a strong one, quite a significant one. So in a way, that's why, guys, for now, we're going to keep an eye on these two levels. And as you can see, this barrier here on the top, the 68 point, well, let's round it up towards 40. The 68.40 also acted as a very good level of resistance, but even though we did have an overshoot, yes, but as you can see, the 4-hour candle body is kind of struggling to stay above it. So, but if we do get a nice good close here, at least of a 4-hour candle, then yes, the next target that we're going to consider is going to be this 69.6465 zone, which is the highest point of September. We're going to keep it up until then. If we do see a test of this area, then we'll take it from there and we'll reevaluate this again. But for now, we're keeping an eye on these two levels, because with the downside, we'll take a very conservative approach here and wait for a drop below the 65.80 zone first before considering this move lower. So for now, guys, yes, keep your eyes on this little, I wouldn't actually say it's a range until it kind of reverses here to the downside again. So that's why I'm not going to say that this is a range. For now, keep your eyes on these two levels, the 68.40 level on the upside. We need a nice 4-hour candle close above this, or the 65.80 level here. A drop below this could in a way open the door towards slightly lower levels. Bitcoin. Now, Bitcoin reacted somewhat as a safe haven. In a way, it seems like it did kind of it attracted investor interest. So Probably the fact that gold is already overstretched on a shorter time frame too much to the upside, so something else wasn't required. So this is where Bitcoin came in. Most likely, I'm not saying that this is for sure, but it seems like that because we had a nice strong spike here to the upside. The only thing is that looking at this 4-hour chart, you can see that it's still trading below the 200 EMA here on the 4-hour chart, but don't get me wrong, we may see something like this here. We may see some these false moves here, but again, we will ignore the downside if we get a push above this little barrier right here near the 7531 level. Now this is the high of the 29th of December, so and if we do get a nice push above this, this could open the door, like I said, open the door towards higher levels. We will then consider a possible move towards this 7659, or in ways you can round it up towards the 60, so 7660 zone. But if that fails to withhold, now this is where more buyers could start joining in and pushing this one further north. Now we do have a bunch of good levels here to watch, but first let's see how it's going to perform around the 200 EMA here, if it can travel higher, and the most important thing is, can it overcome this barrier right here, the high of the 29th of December. So we'll keep an eye on this one. In terms of the downside, pretty straightforward. A drop below the 6,855 territory here, roughly around here, which is the low of yesterday. This is where it could become a little bit more interesting for the sellers. So keep your eyes on this one. Jumping into a few pairs now very quickly. AUDUSD. Now I talked about this one, guys, and talked about this one yesterday in my morning video, where I was telling you to keep an eye on this potential correction here, possibly leading towards this upside support line. And actually, let me just jump into a daily chart, because that's where the clearer picture sits. So you can see that this move down nicely is kind of coming in line with the idea that I mentioned in my video yesterday, and actually I mentioned this on before New Year, in the beginning of this week, and where I was saying that basically we are looking for some correction here, and ideally this is the scenario that we would like to see. So where the pair drifts a little bit lower, tests the upside support line here, taken from the low of the around the 2nd of December, and then rebounds and pushes back to the upside. Now, looking at this picture here, you can see that yes, it is drifting now to the downside, so that's good news for the bears, but we'll be very careful around here near these 0.6930 territory, roughly around here, and this is where the pair also could test this upside line, and in a way, also do not exclude a possible scenario where, for example, we could see maybe even a small a drop here, a small break below this, all this territory, below this upside line, below this 0.6930 zone, and then we could test the 200-day EMA here. This is the daily chart, don't forget. So and then the pair could rebound back to the upside, and basically we could make this nice false breakout here. So, but again, that's a bit of a bit of speculation here. Of course, don't get me wrong, we have seen these scenarios happening many times, so that's why we're keeping an eye on this one as well. But for now, we are leaning more towards the downside. We're leaning towards a test of this upside line, and then we'll take it from there. If it does hold, we could see a nice rebound and a push to the upside, because overall, don't forget that finally the pair managed to travel nicely above its 200 EMA, 200-day EMA here, and this could lead to, well, this means in a way that there could be a possible change. Well, it's a change in the trend in a way already. Don't get me wrong, it's already a change in the trend. So let's see if it can stick to this new trend here to the upside. And last pair for this session is going to be euro dollar. Now, looking at the daily chart while I'm here, you can see that the pair drifted lower, and now it's testing the 200-day EMA. Now the big question here is, can it remain above this? even if it cannot, still there are still opportunities for the bulls to join in. But for now, it's kind of working out nicely. I talked about yesterday. I talked about this level here, the 1.1175 zone, and what I was saying, that if we get a nice close below that, then yes, there is a good likelihood we could see a further decline. So this is what's happening right now. It is drifting lower. It is testing the 200-day EMA, and in a way, we are kind of probably leaning more towards the downside here, and especially if it drops below this 200-day EMA. But if it continues to balance above it, now this is where the bears should be worried a little bit, because if this 200-day EMA continues to hold, we may see a reversal earlier and a pushback to the upside. So that's why, guys, for now, keep your eyes on this little short-term upside support line. This is going to be our target, and that's roughly near the 1.1124 zone, something like that, 24, 25. Yep, more of a 25, I would say. So, but we will consider all this territory if we get a clear move below this 200-day EMA, and with the upside, we need to see the pair traveling back above the 1.1183 zone, and only then we will consider some moves back towards these recent highs here that we saw in the beginning of this week near the 1.1139 zone, and then yep, maybe even we could see a move even higher. But again, for now, it seems that the upside is slightly off the table from the very short-term perspective. All eyes are on the 200-day EMA here. If it breaks, if it drops lower, if the pair drops below this, then yes, we will consider a deeper decline, a deeper correction. But if it holds, we could see a nice reversal. But the only thing, as I said, we will get comfortable with higher levels if we get a push back above the 1.1183 territory. So let's keep an eye on that one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. Also, I'll just wanted to quickly update you. There won't be any Traders Espresso from Monday, and the Traders Espresso will resume on the 13th of January. So we will have the Traders Tea Time today, but I'll kind of mention this again and during then. But again, there won't be any Traders Tea Time or Espresso next week. So yep, we'll resume on the 13th of January. But again, join me later on today for my Traders Tea Time, where we'll gonna have a look at the markets, a few of the charts again, and see how everything's playing out. Thank you very much, guys, and bye-bye.